Why does the IMF head think that traditional banking will end? Will there be a triumph of XRP or Ripple? How would monetary policy be set if crypto truly comes into play? Stay tuned till the end of the video to find out. But first, we are giving away 25 XRP at the end of the month to one random subscriber to start on their XRP journey. All you need to do is to like the video, subscribe and comment your thoughts on XRP in the comment section. Welcome back XRP Army. Let's grow the XRP Lab community by pressing the like button and subscribing to this channel to stay updated at all times. The managing director of the International Monetary Fund made a strikingly honest statement at a conference hosted by the Bank of England. He speculated that Bitcoin and other cryptocurrencies have a future that is comparable to that of the Internet itself. It has the potential to supplant central banks and traditional banking while also posing a threat to the monopoly that national currencies now have. Christine Lagarde, a native of Paris who has served as the managing director of the International Monetary Fund since 2011, has said that the only significant difficulties with present cryptocurrencies may be resolved with the passage of time. Long term, the technology itself has the potential to replace national currencies and traditional methods of financial intermediation. It even puts a question mark on the fractional banking model we know today. During a talk in which she criticized her co-workers for being unprepared for the future, she issued a stern warning that, a relatively short time ago, there were those who held the opinion that personal computers would never become widespread and that tablets would only be utilized as pricey coffee trays. Therefore, she does not believe it would be prudent to disregard virtual currencies. She talked about 5 important things. First, virtual currencies or crypto. She was not talking about making digital payments in already existent currencies, even either through PayPal or other providers of e-money, like Alipay in China or M-Pesa in Kenya. Because they come with their own units of account and payment mechanisms, virtual currencies belong to a separate category from traditional currencies. Transactions between users may take place directly without the need for a central clearinghouse or a central bank thanks to these solutions. Ripple, like other similar systems, operates by introducing a decentralized ledger that acts as an intermediary exchange mechanism between two different networks or currencies. Ripple is notable for being one of the first cryptocurrencies to reach the market without using blockchain technology. At this point in time, virtual currencies like that XRP offer very little, if any, a threat to the established order of fiat currencies and central banks. Why? Because of their high degree of volatility, risk, and energy consumption, as well as the fact that the underlying technologies are not yet capable of being scaled up. Many cannot be regulated because of their high level of ambiguity, while others have been broken into. However, the majority of these problems are technical in nature and might be solved in due course. A very short time ago, there were many who held the opinion that personal computers would never become widespread and that tablets would only be used as pricey coffee trays. She is of the opinion that it would be unwise to completely disregard virtual currencies. So, is crypto better value for money? What do you think? Consider, for example, nations that have weak institutions and national currencies that are prone to instability. Some of these economies may witness an increase in the usage of virtual currencies as an alternative to adopting the currency of another nation, such as the United States dollar. Call it dollarization 2.0. The experiences of the International Monetary Fund have shown that there is a tipping point beyond which cooperation around a new currency becomes exponential. For instance, the dollarization rate of Seychelles increased from 20% in 2006 to 60% in 2008. Despite this, there are a number of reasons why people might want to save their wealth in virtual currencies rather than genuine dollars, euros, or pounds. Because acquiring digital currency could one day be simpler and less risky than obtaining paper money, particularly in more remote areas. And because there is a possibility that virtual currencies may eventually become more reliable. For instance, they may be issued in exchange for $1 or any other stable basket of currencies on a one-to-one basis. The issuance process might be completely open and auditable, with all rules and parameters being predetermined and managed by a trustworthy algorithm or perhaps something like a smart rule that takes into account the shifting macroeconomic conditions. Therefore, in many respects, virtual currencies could possibly provide an alternative to the currently used currencies and monetary policy. As economies change, the greatest answer that central bankers can provide is to maintain an efficient monetary policy while being open to new ideas and new needs. This is the wisest course of action. So, will Ripple be a better payment service? What do you think? Take, for instance, the rising need for innovative payment options in nations where the collaborative, decentralized service economy is gaining traction. Peer-to-peer transactions, often known as frequent, low-value transfers made across national boundaries, are the foundation of this economy. Credit cards and other forms of electronic money can be used to make payments for a variety of services, including $4 for gardening advice from a woman in New Zealand, €3 for an expert translation of a Japanese poem, and 80 cents for a virtual rendering of historic Fleet Street. However, the fees are extremely significant for transactions of little value, particularly those that take place across international boundaries. Instead, citizens may one day favor virtual currencies because they may one day offer the same cost and convenience as cash with no settlement risks, no clearing delays, no central registration, and no intermediary to check accounts and identities. In other words, people may one day prefer virtual currencies because they may one day offer the same cost and convenience as cash. In the event that privately issued forms of virtual currency continue to be volatile and hazardous, people may even petition central banks to create digital forms of legal money. Will you, then, open the door for the new service economy when it arrives at the central bank and demand that it should be let in? Ripple is clearly the superior option to the others given that it was developed specifically to meet the needs of the financial industry. RippleNet connects all of their financial institutions and enables them to make cost-cutting improvements to their standard operations. RippleNet has already successfully completed transactions on a number of different financial networks. Among these businesses are some of the most well-known financial organizations in the world, including Santander Bank, Axis Bank, Yes Bank, and many more. This raises the issue of whether new types of financial intermediation will emerge. The breakdown of financial services, sometimes known as unbundling, is one alternative. In the future, we may hold minimum amounts on electronic wallets for payment services. The remaining balances might be invested in mutual funds or peer-to-peer lending platforms with big data and artificial intelligence advantages for automated credit grading. This is a world of 6-month product development cycles and continuous software upgrades, with a strong emphasis on simple user interfaces and trustworthy security. A world where data reigns supreme. A world where there are numerous new participants but no overbearing branch offices. If there are fewer bank deposits and money flows into the economy through new routes, then this might be seen by some as casting doubt on the traditional model of fractional banking that we are familiar with. How would monetary policy be set in this context? What do you think? Today, central banks generally influence asset prices via main dealers, or large banks, to whom they offer fixed price liquidity, so-called open market operations. However, if these institutions were to become less prominent in the new financial world, and if there were to be a diminishing demand for central bank balances, then it is possible that monetary policy transmission may remain as effective. As Ron Hammond, Director of Government Relations at Blockchain Association has said, it could happen in the next few weeks. So what will happen over the next few weeks? We will likely see regulators step up enforcement in the crypto ecosystem. Congress likely will have a hearing or several briefings on the recent crash and springboard those educational efforts into legislative text. Make sure to subscribe and give us a thumbs up. Thank you so much for watching. See you in the next video. Kindly note that the prices of cryptocurrencies frequently change, so by the time you watch this video, it might have changed to a whole new value. The information provided in this video does not constitute investment advice, financial advice, trading advice, or any other sort of advice, and you should not treat any of the content as such. The content in this video is for educational purposes only and hence should not be considered financial advice. Do conduct your due diligence and consult your financial advisor before making any investment decisions.